And introduce the four panelists that we have with us today. I'll begin at the far right, where we have Josh Hanna. Josh is currently the entrepreneur in residence at Benchmark Capital, one of the leading venture capital firms. Josh was also the co-founder of Flutter.com, which has the accolade of being the world's first online betting marketplace. Josh's background is also in consulting with Bain & Company, and he has an MBA from Stanford University. Sitting next to Josh is Scott Brady. Scott has been the founder of 3 publicly traded companies in the telecommunications and software sector. Most recently, Scott was the chairman and CEO of Fiber Tower Corporation, which provides mission-critical backhaul services to the major wireless carriers and holds the most comprehensive collection of fixed wireless spectrum assets in the United States. Scott is also a graduate of the business school from the Sloan program here. Sitting next to Scott is Amy Baker. Amy is the founder of Nature's Cure, which I think is currently the number 7 over-the-counter acne medication brand in the United States. Amy has experience of being a brand manager at Procter & Gamble and at Nestle, and she has a business degree from Wharton, undergraduate business degree from Wharton, not an MBA, I'm assured.
Never did take the time for that.
Self-serving statement there. Okay, and then lastly here on my right is Tony Levitan. Tony is the co-founder of Lexi, which is an early-stage mobile plus internet business. Prior to Lexi, Tony started the eGreetings Network, which is a leading digital greetings and gift center that had its IPO in December of '99 and was acquired by American Greetings in 2001. Tony's also served as a lecturer here in the business school and also at Haas across the bay at Berkeley, and he's also a graduate of our business program from the class of 1993. So please join me in welcoming our 4 guests. So the way I thought we would organize this is I would spend until about 11:30 asking questions to specific individuals, and then they'll just chime in with other comments as things go along. And then around about 11:30, I'd like to just open the floor up to questions from all of you to anybody that you would like to. So I'd like to begin with Amy, actually. Amy, I've heard that you examined over 100 different business ideas before choosing to focus in on one in particular. I'd love to hear something about how you came up with those 100 ideas or more to begin even thinking about this kind of narrowing down process.
Mm-hmm. Well, can everyone hear me? Basically, my husband was actually going to the GSB here in '92, and I was working for Nestle in the city, and I found that I had learned excellent skills from both Procter & Gamble and Nestle, but I knew I didn't want to stay there for my entire life. So as soon as he was done with business school, I quit, and then I went on a search because I didn't have any brilliant ideas of my own. I just knew that I had learned some really wonderful skills from these 2 companies. And so I just started networking, and I went to several inventor and entrepreneur conferences in and around the Bay Area. Cal State Hayward had an inventor conference. I really tried to hook up with inventors who are an incredibly interesting breed of people, very creative, have a lot of ideas, but not necessarily the skills to launch a product into the marketplace. I also started going to angel networking groups and listening to entrepreneurs present their ideas to angels and wondering if I could hook up with any of those entrepreneurs and partner with them. Additionally, Stanford had kind of a speed entrepreneurial networking, a kind of like speed dating, where actually entrepreneurs, angels, and consultants would gather in a room and have about 1 hour to network with each other, and the investors would wear gold buttons, the entrepreneurs would wear blue buttons, and the consultants would wear green buttons. And then eventually they stopped doing that because everybody was hoarding around the people with the gold buttons and asking them for money. So that was another way that I tried to hook up with interesting entrepreneurs and inventors. So it was really just a matter of tapping all these various resources, which luckily in the Bay Area is incredibly rich with creative entrepreneurial people. I think another place to go is IP attorneys, patent attorneys. if they can, have lunch with a couple of patent attorneys and find out if they're working on anything interesting, and if they think there could be a possibility with hooking up with one of their clients.
Tony, let me ask you, how important do you think it is to have prior experience in an industry that you're even considering an idea in?
Work or consumption? Because I think they're different. Can I just say something? Frederick, go to a different... This is my business partner over here, who for some reason is here listening to this. Go to a different panel. We need to learn how to negotiate. Will you just go to the negotiation panel?
Okay, I'll tell you what. I'll let you go if you're not good.
All right. Well, that sets a really high bar. So when we founded eGreetings, we were not really looking for something that was that came out of our experience. It was more that came out of our lives. In fact, one of the first things we did is we grabbed an industry expert who happened to be married to one of our classmates when we were here, and learned all we could about the industry. And that helped us in a lot of ways. But one of the things that we found is that a lot of times when people are in industries really deeply, they kind of create a tunnel vision around the industry. So we found, first with eGreetings and now with Lexi, that by coming in and not being of the industry, we ask different questions, and we're looking at things very differently. With Lexi, we're focusing on a lot around interactive audio, and we've been speaking with experts who have spent their entire working careers in speech recognition and voice recognition. And what we're finding is that they've focused on stuff in a way that is really consistent and very creative, but it's kind of stuck in a trough. And so we're asking them questions that we were very surprised are leading them to say, I never looked at it that way. So while on the one hand we wanted to have some credibility in a space, on the other hand, we think you can learn a lot of this. None of us were, back in the early days of the internet when we were hiring our first national sales manager, our board said, well, you have to have someone who has internet ad sales experience. And I said, well, both of those guys are hired right now. So we went out and we got a great salesperson who had embraced the internet as part of his life, but not yet as part of his livelihood. So I think the things that we look for personally and in the people we work with is an orientation towards something, but not necessarily someone who's really steeped in a certain industry or various space.
Okay. Josh, the business that you started up initially, Flutter.com, that was very much thinking outside the box from what was being done at the time. So I'm curious about the extent to which you were thinking in very unorthodox ways about searching the landscape for ideas. Was there anything that maybe subsequently has become more common, but at the time you thought was a very unusual way of going about trying to even find ideas? Was it scanning particular literature or something along those lines?
Yeah, it wasn't, we weren't super methodical, I wouldn't say. It wasn't sort of this process where we made a big list and tracked through things and process, though I think a lot of people have had success that way. I think for us in that opportunity was pattern recognition is sort of the approach we would bring to it. So what are other businesses we liked, and what could we learn from those? So Flutter as a business, what it basically was is it's an online sports betting site. It's now called Betfair, but what was different about it is it's like a NASDAQ for betting. If you don't know anything about betting traditionally, it's just somebody takes all the bets, and this just creates a marketplace, moves it all, kind of like an eBay for betting. And that was exactly the analogy we were going through, looking for ideas. And at the time, we said we found a lot to admire about eBay, which is all very obvious now, but in 1998 it was less obvious. I mean, it was obviously a successful business, but it was less obvious that it was the juggernaut it is today. And we thought, well, what else can you use the internet to connect consumers where they couldn't do business directly with each other before? And you thought, well, there's dating maybe, or loan. We thought about loans, and now that idea is good enough that it took only 8 more years before now a couple companies are doing that, and various other things. Insurance, you could conceptualize a world where some people are insuring other people's risks, and it's just a broker rather than middlemen. But my business partner had the idea of betting, and we just sort of jumped on that idea. So it was more organic, but it was part of something implicit in your overall question here is that is that people are sitting here saying, I want to be an entrepreneur, I don't have an idea. How am I going to get across that idea? That's probably why a number of you are here today. And that is one process. I don't necessarily think that's the best process to become an entrepreneur. It's much better somebody who is in an industry, sees an opportunity, and says, I just got to take advantage of that opportunity. But I was in the same. I was in those shoes. It was 1998, and everybody had to start an internet business, and I had to do my part. So I had to come up with something.
Scott, let me ask you, one of the things that I think Josh sort of suggested there in his answer that I was a little bit surprised by was that even in coming up with a fairly ingenious new idea, he was paying close attention to the trends, what was happening at the time and general patterns that were going on. How important do you think it is to be trying to pay attention to those kinds of trends and maybe looking for ways to innovate incrementally along that path? And how important is it to come up with a much more novel solution, something that's completely off the radar, that's really a very radical, different way of doing things?
Just to give you a little bit of background, Fiber Tower, the company that I was part of starting, was founded actually here at the GSB by 4 people that really didn't have an idea what they wanted to do. The purpose that we set out for was to identify an industry that we thought would be high growth. So first off was, where do we think the trend is going from a macro perspective? So where is, for example, we picked wireless, and in 2000, we thought wireless was really at the cusp of a breakout. You could look at it around the world, but the U.S. was poised for dramatic growth. The challenge for us was, not being from the wireless industry, was identifying how to participate in that industry in a way that would capture value. And our goal was 24 months out. We wanted to find an opportunity that was not a significant problem today, but would be a significant problem if the industry continued on its current trajectory for 24 months. So the methodology that we used was fairly simple. We ended up identifying key wireless carriers we wanted to work with, went to industry conferences, met with providers and vendors in the industry, and really just talked to them and said, okay, here's what we see happening. What do you think are going to be the challenges from your perspective 24 months from now if this continues at the same rate? And we were able to identify a couple of issues that we thought would be critical that were very much trend-based. If things like data over wireless became significant, what would be the impact from a wireless carrier's perspective? Our approach was very quantitative. We wanted to find a way to be able to present mathematically how we could solve a problem for, in this case, the wireless carriers, in order to address a need that we thought they would have 24 months out. So we were successful in doing that, but it was very much looking at the macro trends and then trying to dive in underneath it.
So something I think all 4 of you have talked about so far is the sense in which you had kind of a dispassionate, analytic approach to collecting ideas. And I think one thing a lot of entrepreneurs wonder about is how important is it to be really passionate about the idea that you're pursuing? Is that something that's really necessary to be a successful entrepreneur? Or is it okay just to be passionate about wanting to be an entrepreneur in general? Let me ask Amy that question. How important do you think it is to be passionate about the specific idea?
I think it's very important. I looked at, I don't know if it was exactly 100, but so many different ideas. And I was really jazzed up about the Nature's Cure idea. And, it really fit with what I had, kind of learned in my background. I was very interested in skincare. I really liked the idea of working with a young consumer target and really being able to target them effectively with advertising. And I knew I just wasn't a techie type of person. I couldn't get jazzed up about a lot of the high-tech ideas I was seeing, even though, I live here in the Bay Area and in the Silicon Valley. So I think it's very crucial because when you're working 24/7, you're trying to raise money from people who, really don't even want to take your phone call or want to sit down with you. Then you're trying to sell to your customer. If passion doesn't come through, you won't even get to step 1. So I think it's really important. I think it's crucial.
I'd add to that just because, I was in a big sports, I started a betting company in England. I'd never been to England and I didn't really bet on sports. So I wasn't the model passionate about it. I didn't like sports. It never hurts. It certainly would have helped to be, another question you asked, domain experience, that would have also helped too. You can succeed without it. I think maybe the most important area in which having passion for it, and this is maybe a biased panel because it's a few successes. Like, if everything goes well, I don't think it's really that necessary. But a lot of the outcomes being an entrepreneur means you run this business for 8 years, struggling, and it's not super successful. And hopefully you like what you're doing then, because you could end up doing it for quite a while. But can you be a successful manager of the business without being passionate about it? It depends. It certainly wouldn't hurt to be passionate, but it's not out of the question.
I think that's one of the challenges with search funds. Fred and I talked about doing a search fund, and we just couldn't get over it because the idea of investing in something about which we were not passionate didn't really work. I mean, so Scott, I applaud what you did. I couldn't even read the description, let alone of his business, let alone run a business like that. Because
my wife still doesn't know what I did.
Because it's just so far afield from where I'd come down. I think the passion is, as Amy says, the passion's the thing that gets you up off the floor after you get the crap knocked out of you, and it's really important to have.
Just from my perspective, what I think I was passionate about and the other founders were passionate about was, solving a significant problem, winning, being, sort of hyper competitive, wanting to enter a space and dominate it within a certain period of time. I admit we were somewhat dispassionate about what we were doing, but we were very passionate about what we thought we could build in terms of value and having fun and, building a good culture and surrounding yourself with good people. That was what we rallied around. I'm not sure that, what we did was a fairly technical, aspect of the wireless industry. I'm not sure, 6 years ago I woke up and said, wow, this is what I want to do. But ultimately, building a very successful company with great people was what was worthwhile.
Well, the interesting thing about that, sorry, we're belaboring this question, it depends on what you want to get out of it and what your satisfaction is, right? If you say that the most important thing is that I must be passionate about it, then I sure hope you happen to be passionate about the area where there happens to be a lot of opportunity to make a lot of money today, right? Because if it's not, then you're going to be in a tough industry. If you're passionate about making cars or whatever, it's going to be a lot harder than if you're passionate about wireless spectrum, right? So you got to balance, the thing. Everybody loves sports. Not everybody loves, but you know what I'm saying. Like everybody loves sports, and lots of people start these sports-related businesses or whatever, and they don't, or different things. And if it's all around your interest, you might not be optimizing for market opportunity, and you just have to trade those two things off. But you get satisfaction out of building the business. You get satisfaction out of the business being successful. Sort of a portfolio. I wouldn't go for none on any of them, and I wouldn't try and optimize for one at the expense of entirely all the others.
Well, Josh, you're talking about all being successes. So while Freddie and I were on our way to our next Lexi, I did a golf startup, and that was one of my passions, and it was really a lot of fun. It was I enjoyed doing it. It was a product that made a lot of sense to me, and I didn't research it all that widely, and ran into a big problem, which is that most men are boneheads. And they're especially boneheaded around golf, that because the thing was focused on providing, information support to you on the golf course while you're playing. And, guys, they would rather just drink beer. And so I had a lot of passion for it, and I could talk to a lot of people about it. And, it just wasn't it was a nice little product, but it wasn't a great business. So I like what Scott's saying about the idea of building. For me, the real aphrodisiac in building a company is in creating the culture and creating an environment where people can be better tomorrow than they were today. And whether that is in fiber towers or in skincare products or in this mobile internet space or sports betting, I think that that probably cuts across all that stuff.
So you're all emphasizing the importance of being passionate about it, but you're also saying that it is important that there's a real value here. And I'm curious to know about how some of you went about trying to quantify or be a little bit more analytic as you're distinguishing among the different ideas that you're looking at, and in particular if there were just specific analytical approaches that you had in mind and how important you thought it was to be able to quantify the value of the business that you were thinking of starting, in addition to being passionate about it. We agree that those two things really matter. Maybe, Josh, if I could start with you, because you've emphasized the importance of being passionate there, but how much as well is in terms of analytical tools to evaluate value, and what were the tools that you like to use?
I think there are a lot of tools you can use. I'm fairly lazy, as it turns out, and so I don't do a lot of that stuff. And I'm more instinctual. I'm more instinctual on the business, and you sort of see opportunity. And I do feel like there's a lot of false precision in startups. Especially if it's a raw startup. People create these models and they have this really robust idea of what their margins and revenue are going to be 5 years out, but you just don't know, right? And so, so this is the way I think about it. So I've done a couple of. So there's another business I've done subsequently, and I'll make this really brief. So the sports betting, I just looked at it and said, if you went to Vegas and you bet on a game, Vegas charges a 10% VIG, 10%, but that's only from the winner, so let's call it 5% transaction fee. That's basically their overhead. And if two guys bet on a tennis match on either guy, Vegas is making 5% from each of them. That's 10% totally. Our marketplace charges 1%. You've just crushed out. And I think we'll do, whatever, like $20 billion to the bets of the marketplace this year. That's a lot. There's just a lot of money floating around. There's huge sea change in that industry. There's a lot of money to be made if it works, if you can make it work. And that's sort of at the level I think which is sort of the core elements, but not getting super detailed for the ideas I'm working on, which are sort of highly risky, high growth, and succeed or dramatically fail businesses, which, by the way, is no accident. I mean, one of the things I really value is my time, and I don't want to be trapped in a business for, 10 years that's sort of eking along, right? I want a business that's going to fail spectacularly if it's not going to succeed spectacularly. But anyway, so in those kind of businesses, it's a little different than if you say, I'm going to go, a lot of people made money starting restaurants, right? If you're going to start a restaurant, a lot of people lost a lot of money too, but you're gonna need a little more strict budgeting. But for these kind of concept ideas, it's gonna be pretty high level.
Josh, I'm curious, how much has your attitude towards this piece of it changed since you've spent years working inside a VC firm?
It hasn't changed much, actually. It sort of reinforced my thoughts. So what happened was I started my first business, and then we merged with these other guys, Betfair, and I left, and I couldn't be CEO, and if I couldn't be CEO, I was going to take my toys and throw them out of the crib. So instead I left, and I took this job as an entrepreneur in residence at Benchmark, which is supposed to be a 6-month job that I still have, and that was 2002. And so I sort of hang around and I do whatever I want, but sometimes I help them look at deals. So, over the course of 5 years, I've looked at a lot of deals with them. I've sort of figured out how they look at things. And I would say it hasn't changed much. It sort of plays to the way that I thought of starting a business. When we started our business, when we raised our first round of capital, we had a 14-page PowerPoint presentation. That was all we had. We did not write a business plan. We did not do. There was not a lot of modeling. Either you believed in the team and the concept or you didn't. And that's the way I would say 90% of the investments Benchmark makes are. They like the guys. They think the guys will make them money. They think there's some opportunity in the space. And that's sort of where the opportunity is. And I think that's one fundamental difference, if I can move a little bit parallel to that, is that what's different looking at it from a VC standpoint versus an entrepreneur standpoint. A VC is, in my experience with the VCs I've worked with, invest largely on the team, right? It's proven guys who've proven that they can go out and make money from the investments. Well, the problem is you're stuck with you, right? Like you can't change out the team, and you either are that person or you aren't that person. And so your threshold for an idea is actually, in my opinion, much, much higher. You need a really, really great idea to cope with the inevitably mediocre execution that you have to assume from yourself, or at least that's been my experience. Because I did a thoroughly mediocre job of managing the betting company, but it was a stunner of an idea, and it wasn't even my idea, by the way, and we can talk about that in a minute too. But it was a great idea, and it survived. And you think I'm kidding, but I'm not. It survived our pretty mediocre execution, a great idea, in a way that a lot of businesses out there are execution businesses, that the idea isn't that innovative, but the team can really nail it and take out the competition. And so I think you got to do a little self-assessment as to whether that's you. So the venture guys would love to invest in the latter, the team that can really execute, but it's only within your power to be what you are. And if a lot of people are new MBAs, that's not going to be you. You're going to make a lot of mistakes along the way, chances are.
Scott, I'm wondering how important it was to you in your process of evaluating ideas to be more quantitative about it and try and actually use analytical tools to evaluate these things.
I feel like Josh and I should be on opposite ends of the table.
I'm wondering about your CC there. No, I was kidding.
We took a very methodical approach.
Yes.
I mean, I agree. I don't want to waste my time. I mean, when we looked at opportunities, I had 3 other co-founders I was working with. We looked at a number of ideas, and we took, the hardest part was creating the discipline around objectively evaluating the ideas. We tried not to get personally, we didn't want to be passionate about just one thing. We were passionate about building a successful company. And that was having the objectivity to do the analysis, the very hardcore, detailed, not so fun, process of creating business models, looking at trends, gathering data, doing interviews, trying to identify what's going to happen, and then making an objective decision at the end of the process. For us, the hardest part was you become enamored with the search. The hardest part was defining the endpoint, saying that, we're going to stop, and here's the threshold that if this idea passes through this threshold, this is the one thing we're going to do. We're going to stop looking. And that was the hardest part of the process. But we were disciplined, quantitative. We didn't come from that industry, so we overwhelmed investors and customers with the fact that we learned more about their business than they knew from a very unique perspective. So, I don't
Well, you
think...
also run 2 companies before, and so you probably can count on executing a little bit better.
Well, and quite frankly,
first-time entrepreneur.
our business was an execution business,
Yeah.
and my time was spent, hiring the most talented people, building a great culture, setting metrics. It was a very process, methodology-driven structure for creating a company. And there may be companies out there that are more subject to whim, but I think most companies require that methodical process. And if I'm an investor, and I've looked at, I've worked with a number of VCs as well, that's the type of discipline that I'm looking for. Somebody that really gets it, is going to be able to work through the inevitable, peaks and valleys that these companies go through and can come out the other end. I mean, we used to joke about near-death experiences. We used to have a near-death experience like every other month. It used to scare the hell out of me. But you work through it. You either put your head down and make it work, but that's part of the discipline of taking somebody's money, is having the wherewithal to be disciplined and get through the other end of the tunnel.
Scott, how important is it to use these kinds of analytics as an early filter on ideas, and how important is it to be a little bit patient and let the idea develop a little bit more conceptually, and then refine the analytics in the hope that maybe things will start to look a little bit clearer as the idea becomes clearer in your mind?
Well, I mean, I think there is some aspect of false precision, but it's precision from your perspective at that point in time. So for us, it was very important to get as deep and as introspective about the opportunity as possible, and then make the best decision we could at that point in time. Invariably, as you go further with the opportunity, you're going to find stuff that you didn't know. You're going to have to alter that model. But for us, we viewed the business model and the underlying data as one of the core assets of the company, and we did from the beginning all the way to the end, because that was kind of the secret sauce that made this particular opportunity work. And I think that's probably the same for every business.
Amy, I'm curious about your experience on the same topic. How important was it to be analytic and to quantify the value of an idea?
Well, I think when you're first going through a lot of different ideas, you can sift through them quickly by using your gut. So you can say, can I get passionate about this? Do I like this? Is this something I can add value to? And then if it is, then I think you really need to hone down and become a little more analytical and look at it. And in terms of, for example, Nature's Cure, I thought from a gut perspective, I like this, but I put it through a big screener. And basically I looked at, how large is this marketplace I'm going into? How much share can I get? What are my competitors like? How important is this category to these companies? Because we're competing against J&J, Procter & Gamble, SmithKline Beecham. We're the tiny little guy among these huge competitors. So how important is this category? By the way, all this has changed in the last 10 years, and now it's become an extremely important category. But when I first got in there, it wasn't an important category. Also, how effectively can I advertise to this target audience? Because I knew advertising was going to be a big aspect of building this business. So I knew I couldn't spend millions and millions of dollars. So if it was a target audience of adults 18 plus, well, that's a lot more expensive than teenagers 12 to 17 years old. So that was another kind of checkpoint for me. And then the last thing I did is I kind of put it through a regulatory checkpoint. Well, is the FDA going to close this down? Because this is a homeopathic product. So from an FDA perspective, how do they view this product? So regulatory was also a big reason. And then the number one thing to me was, how different is this product from the competition? Because if you didn't have a point of difference, you weren't going to survive very long. And that has been the absolute key to the success. And I'll say even now, I take that same screener I used, and we put every new product idea that we come up with in the company through this exact same screener. I mean, we've modified it and we've added to it, and it's become tougher. But and we decide whether to go forward or not. And then even in that process, we'll take an idea, we'll put it into a concept study. If the concept turns out well, then we'll develop a product, and then we'll put that in a test market. So before we launch something, because if you launch something and it fails, you've basically killed your company at this point. I mean, I'm not Procter & Gamble or anybody who can afford multiple failures, but so it's really important that what you take out there, you've really screened it well, so that by the time it does get out to the marketplace, you're not going to have any big dogs.
Tony, I'm curious about your experience in this respect as well, but let me also ask, in addition to that, how important for you was it to go around talking to people? I think one of the things that young entrepreneurs especially worry about is the trade-off of talking to people in terms of getting good feedback, which helps you refine your ideas, but maybe giving away ideas and prompting competition. That in conjunction with how important you think the analytics were for you as well.
So Fred and I have used idea screens both times, and we had a fairly sophisticated screen when we were discovering the idea that eventually became e-greetings. It was our 6 criteria for new media merchandising success, and others have talked about trends, and for us in 1993 the trend was around new media, and so we took probably about 150 different product areas and industries and ran it through that screen, including books and music and perfume and pets and furniture and a bunch of stuff that if people had asked us in 1999, 2000, are these good ideas, we could have told them no, not yet. But coming out of that was useful for us, but it was really the confluence of a couple things. When we looked at the greeting card market and we looked at it as a retail market, it was interesting against the screen. There was a lot in there that was useful to us, but it was this other influence that was going on. When we were starting the company, we were among the first 250,000 subscribers on AOL. Because classic Silicon Valley startup roots, we were working out of Fred's second bedroom in my garage, and he's a morning person and I'm a night owl. But neither of us were engineers, so we had no idea how to use this thing called email without having the happy confines of AOL. So I'd stay up till 2 in the morning working on our business documents, and he'd get up and I'd send them over to him. He'd get up at some ungodly hour, start working on them, and I'd rollerblade over his house and we'd work together. And it was while we were playing with this new medium, which you couldn't really play a lot because these were 2400 baud modems and things were slow. But the greeting card stuff that we got an influence in one place really took a different perspective when we said, let's not look at greeting cards as a consumer product. Let's look at them as a communication device. And the vision behind e-greetings and enhancing electronic communication was born. So that screen was really deliberate. We also have used a screen with Lexi that was a little less refined, but identified 3 really important things for us. One was we wanted to be able to create a mobile. So again, we picking up on the trend of mobile plus internet. We decided that was going to be our space, but then what to do within that. We decided we wanted to do something that had absolutely nothing to do with carrier cooperation. Just working with carriers was just a really bad idea. We wanted to shy away from applications because our orientation is that phones will always favor audio. And then the third one is we wanted to serve consumers in a personalized way. So we ran through a bunch of ideas that went through that as well and came up with the current one. But one of the funniest things is those of you who are students here know Chuck Holloway, Chuck was on our board with eGreetings and also with Lexi. And in 1993, the IBM Multimedia Lab was the place for new media. And he set Fred and me up with an interview there with the head of the Media Lab. I mean, we could not have asked for a better contact to learn about our opportunity. And we went in there, and the guy was very gracious. He spent an hour with us, and we walked out of there, and I looked at Fred. I said, so did you learn anything? He said, well, No, not really. And we walked it about 50 more paces. We said, well, but did we say anything? He said, no, not really. So what we realized is that we didn't give him enough information for him to use his expertise and insight to help us with our idea. So our patented line now is if your idea is so fragile that it can't handle a conversation, it's probably not a very good idea. It's got to be more sustainable than that. So, we try to be choiceful about who we talk to and what we give people. We try to work with people who feel ethical. So if you can get introductions to people where you have a screen there that, if someone's not going to just go ahead and rip you off. But, if it can't handle a quick conversation with a guy who's deeply entrenched in a space so that you can learn more about the space, then you probably need to find a new idea anyway.
Josh, do you have any thoughts on
I
that
feel
issue?
almost chastised for my approach. I'm trying to be more methodical. But I stick to my guns. Google had no business model. YouTube had no business model. Really, I mean, it goes
Amazing
both ways.
they got together too.
Yeah,
Right?
they would roll all those companies into one. eBay didn't know. I just looked at the other day at the original eBay business plan, and they didn't know what they had. It just depends. If you're certainly a late stage LBO investor, has to kick the numbers on everything, and then somewhere it's just different businesses or different things. I guess. Tony's approach is more similar to my approach, which is looking at some macro factors and trying to be inspired within those. I believe there's really outstanding ideas, and if the idea you have isn't really outstanding, you'll know if that idea is really outstanding, if that's the one to pursue, and if you're wondering if it's the right idea, it's probably not the right idea. You can make it go with pretty good ideas, and that's really the risk of this process, I think. That's really the risk of the process that's being articulated here that says, I want to be an entrepreneur. I want to start a business in a year, ideally. 2 years at the max. I need to start processing ideas. Here's the criteria. Here's the list. Let me get the best of the available set of ideas I have. And I think this process will yield you to the best of the ideas that come through it. A nice analytical process will sort out the top tier of those ideas from the bottom tier of those ideas. A problem in my mind is what if that idea is not really outstanding? It's just been my experience in the two businesses I've started that having a really outstanding idea was hugely leveraged, and I felt like waiting for that inspiration to come along was very valuable rather than saying, I'm going to go with the best idea I can come up with in the next 6 months, and we'll see how that turns out at the back end. And so I guess that is why I'm a little leery of a more methodical process. But then again, if you are where you are, if you're graduating from business school and you want to be an entrepreneur, at some point you got to start a business. So yeah, I guess in that case my advice would be give yourself as much time as you can.
Well, and create people around you. We
time.
settled on this idea when one day after talking to people and talking with them about it, our council, board members, advisors, friends, family, and I said to Fred, our naysayers are not saying nay. And there was a bit of an epiphany in that everyone agreed that what we're chasing now is a very, very big idea. There wasn't a lot of coalescence around whether it was a good idea because it was still kind of amorphous and we had a lot to learn. But everyone got enthusiasm for the space. And so it's easy for you to get enthusiastic. It's really easy for me to get enthusiastic about something. But then when you throw it out in front of someone else and they don't get it, well, you have a choice, which is to continue pursuing that. But if enough people don't get it, then, like Josh is saying, then, maybe it just doesn't connect.
And one other thing about having people around you is I find there are a handful of people who are real idea generators. And most ideas are really dumb, but they generate a lot of ideas. I'm not one of them. I don't come up with a lot of ideas. When I did the betting thing, it was a friend of mine who came up with that idea, and he's actually come up with a couple other businesses I've been involved in. They've all been good ideas. And that's not to say all his ideas are good, but I would say surround yourself with these people. There are these people that come up with lots of ideas, and they don't execute on any of them because, frankly, the hard part's actually going out, quitting your job, and building a business. But if you can get those guys around, if you're not one of them, they'll bubble up lots of ideas, and you might get inspired. The guy I did my most recent business, EHOW, with, his old business partner is just one of those guys, this guy Dan Abrams, and he works at a EDA tools company here, but he's always peppering emails like once every couple of weeks. How about this? this was one of his ideas. It's a really bad idea. We'll sell human breast milk. We'll get India. We'll get all these lactating mothers. We'll package it, and then you'll be able to buy, instead of formula, real. I mean, it's just like all like these really dumb ideas, right? But like mixed in with all these crazy ideas are things that you go, that's a dumb idea, but there's a nugget of something there, and not that particular one, but
Actually,
could
they're
be
saying
bigger
that
than a
that
nugget.
helps cure some cancers.
yeah. Well, I mean,
Makes good idea.
there are people. It's been my experience. There are people who come up with a lot of these ideas. If you're in the process of trying to come up with ideas, I'd surround yourself with those people.
Yeah, actually, my final, how I came to Nature's Cure after talking to all these crazy inventors, was through the president of Nestle Beverage, where I had just quit a year before. He said, I kept in touch with him, and he said, I heard about this idea. Why don't you look into it? So you never know where the idea is going to come from, and it's just really a matter of getting out there. And what you said about the process taking some time. I mean, from the time I quit until I actually incorporated, it was 2 years. So it definitely takes time. It's nothing that can happen overnight. And I think when you try to put a short deadline on it, it can make it actually uninspirational. So it does take time to really get to know people and network. It's not something that happens overnight.
So I want to make sure we have time for questions from the audience. Does anybody have particular questions for?
I have one reference to the time. When you developed these businesses in the time frame that you did it, in the era of the time that you did it, looking at it progressively today, do we have that amount of time to meet demand, putting our idea out onto the market? Because once the idea is out on the market, it becomes saturated with other people with similar ideas, then you create competition and you don't really have the opportunity to seize the moment. For example, like social networking, it's out there, and now everyone wants to do social networking. Is there time?
It's easy to overestimate the urgency of the situation. I think it pays to move as quickly as you can, but ultimately the winners comes through execution, not through. It's in my experience very rarely pure first mover, and so yeah, I think my experience has been you generally have more time to figure it out than you probably think you do when you're actually trapped in the situation.
Up the back.
A lot of you mentioned kind of going to trade shows, conferences, and whatnot. I'm curious if there are questions that you ask that might not come to the top of my head or something like that. A few of us are headed to a trade show this weekend in Vegas, looking at the footwear space. I mean, just how to approach people, just other types of questions to think about that are not obvious ones.
I mean, we did a lot of that. So the key thing is avoid the keynotes. Go on the show floor. Don't talk to anybody that has a marketing badge. Go right to the engineers. I mean, we went to the people who developed the product and asked them the questions about, what problem were you trying to solve? What's going to happen if your product works? What are you concerned about? And typically they'll tell you that if this thing really works, this other part of the whatever is going to make it difficult for me. So they'll start to tell you about the whole value chain, and how they fit into it, what problem they were solving, and what downstream issues could actually happen. But we wasted a lot of time, talking to marketing people and sitting in keynotes, and it was just, it was finally when we got to the folks that either wrote the software or made the product, that's when we got to the heart of what was going on.
You a GSB student?
Yeah.
So you second year?
Yeah.
So you have about 3 months to take advantage of one of the greatest gifts that you'll ever have, which is being able to send an email or pick up the phone and say, hi, I'm a student at the Stanford Graduate School of Business. Can I talk to you about your business? Once you leave, you lose that. It's very rare that people out there don't want to talk to you.
Right here in front.
Question for Scott. Scott, if I heard you correctly, you said that you came together with 5 other GSB students. 3 other. And you weren't sure what you wanted to do, but you wanted to start a business. Can you just talk a little more about how you guys came together? Was it just you all wanted to start a business? Was it, did you pick people from different backgrounds? The audience here is filled with people who want to start a business, and we should probably get together as well. So can you just tell the story of back in school, how you did that?
Yeah, I mean, the net was none of us wanted to go get a job. I mean, we had very different experiences. So there were 2 Sloans and 2 MBAs. So I had founded 2 companies, had left my last company after it went public, went back to business school, and we ended up hooking up with 2 MBAs that to this day are still 2 of the smartest people I've ever met. So I used to sit in this class, Chuck Holloway and Irv Grossbeck and Garth Lohner, and I was just amazed by the level of intellect and insight that these folks developed. And I think it was through my appreciation of their capabilities that we ended up wanting to work together. But what brought us together was basically the belief that none of us wanted a traditional job. We had no idea, literally no idea what we wanted to do. We just felt like it was a well-functioning team where we had built a strong friendship over a year, and we felt like we could function well together. And just to be contrarian again, sorry, ours was all about setting a time frame. It was about the discipline of saying that we're going to do something, we're going to set this amount of time. I mean, these guys didn't have the leisure of having a big bank account where they could do nothing forever. They had to make a salary. They had to pay back their business school education at some point. So it was about setting a very specific time frame, defining, what was going to be the go, no-go decision. And we set 6 months. And I think that was critical because it created a sense of urgency in what we did. It also created an endpoint. We ended up selecting the idea just at 6 months, and then spent another 3 months basically getting it to the point where we could get it funded. So we actually went beyond what we had originally put together. But I mean, that entire team stayed intact through 6 years of building a company. And I would do something with that same team again, given the opportunity.
When we were coming out of school, Fred and I decided we wanted to work together. We were a bit on the geriatric side of our class, and Fred had been a multiple-time entrepreneur, and I had done a lot of entrepreneurial things. And it only took 1 or 2 interviews with BCG and others to realize that I was unemployable coming out of here. But I needed a guy like Fred to be an entrepreneur. So we graduated in June '93. We made a pact with our wives. We'd have business plan by September. A quarter after that, we'd have money raised, and a quarter after that, we'd be in the market. So I like to say a healthy dose of naivete is an important asset for an entrepreneur. Because come November, we could not write a business plan to the original idea, and that's when we started doing more of our exploration. But it was really, this time around, it was interesting in that over the time between e-greetings and starting Lexi, he and I have gotten together on a regular basis to talk about doing another company together. But it wasn't, and we kept looking for ideas, but it wasn't until the beginning of this year we said, listen, we're going to do another company, period. Then we started our search for what the idea was, but we committed to each other first. That was really the most important thing. And then, everything else just kind of fell into place. So I'm not a big fan of the time horizon because I believe if you put an end date on something, then you're constantly working towards the end date. And for some people, Scott's example, that's a really good thing. And others, you just kind of rush and miss things. And I'm more of that type. But yet, we needed to create positive cash flow in our family lives. So we had an end date in mind, but we had enough room that we could flow within that and be creative within that structure.
The question is, how do budding entrepreneurs connect themselves to all of the small business opportunities that are don't have sustainable competitive advantage, are not unique and are not new?
For us, one of the questions in our screen was, do we want to build a lifestyle business or did we want to build something that was really big? So that was part of our filter going into our filter is what we wanted to chase. That's how we made that choice.
And I know for Nature's Cure, the idea was always to sell it to a larger company, a more strategic player, one of our competitors. So that was always kind of the idea from the beginning. So that meant a bigger kind of business versus a lifestyle kind of business.
Thinking about your question, the way it's phrased, you're talking about the monetary outcome of starting a business. And I think certainly if you're prioritizing that aspect of making money, you should be very thoughtful about, I think there are a lot of small business opportunities. And, I think not taking capital from a VC or some sort of investor like that makes it a lot harder in a lot of ways for that outcome to happen. You're now swinging for the fences. You're sort of saying, I want to make an awful lot of money or none. And there are a lot of businesses where you could sort of go for the middle ground of creating a pretty nice life. but a lot of those are businesses that are smaller and self-financed, where you're taking all the risk, but you're also taking all the reward if it works. And so it's sort of what's important to you.
And it's probably a slower process as well.
It's slower, and I think those businesses, this is probably an overgeneralization, are going to be less intellectually satisfying, right? I mean, there's a lot more quote-unquote fun in taking $5 million from some other guys and saying, okay, let's build something real big in 2 years, than grinding it out. But it depends on what's important to you and how you prioritize the different elements of it.
I think depending on the economic climate, raising capital is in and of itself a significant barrier to entry. So, I mean, the industry we picked was very capital intensive. We raised, companies raised almost $750 million. That in and of itself is a significant barrier for most other people to get into. One of the benefits of, being at Stanford is you're given the tools and in some cases the credibility to go out and attack that mountain of raising that amount of capital. So, I mean, for us, I think it's just as hard to build a small business as it is to build a big business. So, build a big business. I mean, that's.
Yeah, I get. Well, let me counter that a little bit. We seem to be on different sides of the fence on a lot of these things. I think that's right. and I think one of the tools you have in your pocket is that ability to raise money that the average Joe who's starting one of these small businesses can't. And so to throw that away at your peril, right? That's one of the big differentiators, is you can put a lot of capital to work in a way that the average citizen can't, chances are. So I founded what's become Betfair. It recently, SoftBank bought a third of it. It's sort of like a $2.5 billion company. Subsequently, I bought this little company with only my own money. I raised no venture capital. The amount was an amount of money that pretty much one in this room could easily borrow from family and friends to buy. And that was a company called eHow that had gone bankrupt, and then we resuscitated it and sold it earlier this year. And I make more money off the second one than I will off the first one. I did make more money than I will off the first one, right? And the second one was pocket change. The first one I raised $44 million in venture over the first year on. So the lesson sort of out of this deal for me was, I did the first one. I looked at one of my classmates, Ed Yim, who was a business school classmate of mine, who tried to do a search fund. That didn't work. He ended up winding it up after several years, taking a product management job. And then he's one of the only guys I know who had the foresight and the courage in 2002 to say, I think these internet businesses seem kind of undervalued to me. And so after the experience of 3 years of searching, not buying a business, taking a product management job because he was going to have kids, he took out a mortgage on his house and bought a couple of internet businesses you've never heard of. And, pretty soon he was making, cash flow that I think anybody in this room would be happy with, and then sold the business a couple of years ago for a very big check. And I looked at that instructively and said, that's interesting. He owned all of that. Look at how much money you made by owning all of that business rather than somebody else doing it. And so, I think you throw it away at your peril. It's a huge competitive advantage. When I did the betting business, we raised, that amount of money, and the competitors that we ended up merging with could only raise like a couple $1 million. And the fact that we raised it made it impossible for them to fundraise. So there's a lot of truth in that, but it also just becomes harder to get a good financial outcome for you once you get those venture investors in there as well. But certainly the upside, the big is bigger.
One thing I was surprised not to hear about was like an insightful or
anything insightful.
Insightful moment about your potential customers when you're thinking about jumping in. What was that one moment that actually made you go forward, regardless of the pile of analytics or screeners? Was there one moment that you said you talked to a young customer, or you talked to an online betting junkie? What was that moment that actually made you confident to go forward personally?
I don't have one.
I mean, for us, we entered a business that, quite frankly, none of us had a background in. So I kid you not, for the first 6 to 9 months, every meeting I'd go to, everybody kept saying, well, this is a great idea, but why you guys? Because you have no background in this. The point where we sort of became confident was when we became experts enough in that space, quite frankly, that we had insights they didn't have. People stopped saying that. They started saying, this is a great idea, how do we do it? So that was, it was an inflection point for us, and it was just a matter of us getting deep enough into the opportunity to really, truly understand it from a customer's perspective.
And in terms of acne, it's an extremely emotional problem. So And if you've ever met a teenager with acne, I mean, they won't go out of the house. They wear a lot of makeup. They won't go to their prom. So there's a lot of emotional baggage, I guess, with that whole problem. And I had 2 nephews and 2 nieces at the time that were going through it. And so for them, they really loved the product. It worked for them. And I asked as many teenagers as I possibly could. And then I realized, wow, there's a lot of adult women. And then I started breaking out from all the stress of starting a company. So, it all came together for me that this would be a great opportunity. But, now we're launching into yeast infection treatments, also combining, homeopathics and the mycosynol nitrate that's available over the counter. And, not that I'm passionate about yeast infections, but again, that's an area where you really want to solve this problem quickly. So I love the fact that we're helping consumers and we're helping them solve problems and problems that you can see visible results. They're not psychological, but there is that component, that emotional component, that they feel better about themselves afterwards. So it wasn't one aha moment, but I felt like I really related to this product and then what homeopathy could do in other categories. I knew it was highly extendable in every health and beauty category that you can think of.
We did a survey, but after we came up with our idea, we ran focus groups, and I think the quote from the guy who ran it said, I've been doing this 15 years, but I've never had a product test worse than this. And so I think in some ways, the product sort of was crap in some ways, so it's fair enough. But it's hard because if you're going sort of far out ahead, it's sort of hard to, it seems like testing with customers is a recipe for incremental improvement. And there are a lot of great businesses built around that, but it's just whether.
Well,
it depends. You need to think about the kind of business you're testing.
When you are ahead, we were up on Sand Hill Road in 1993 talking about enhancing communication, electronic communication, enhancing email. And these VCs were saying, well, why would I use email? I'll just pick up the phone. Yeah. Right? So there are those moments where you kind of believe in what you're doing and you're looking at the trends. And but for us, it comes back to enhancing relationships. So the last one was about that, and this one's about that, and improving people's lives. That's what jazzes us. We looked at some stuff that were more enterprise focused, and it just didn't evoke the same internal motivations as positively affecting people's lives.
Some of you have talked about at pretty early stages of the companies thinking already of exit strategies, whether that's finite timelines or thinking about we're going to sell out to a competitor down the road. You also talk about culture and maybe some long-term value and having that as kind of a core part of your business. I kind of tend to think those two things in a lot of ways butt heads. So how do you balance the two, and has that changed since '98 with seeing maybe what the Google guys did and offers they turned down to continue building that company? Has that had an impact? How do you see those two things balancing?
I mean, two different issues there. I mean, for me, and I think for the other founders in my company, having fun and surrounding ourselves with people that we liked that would be durable for a long period of time was the number one thing we focused on. We spent a huge amount of time recruiting the people that we wanted to bring into the company. So I mean, to me, that was sort of job one. With regard to exit strategies, I mean, you can't sell a business. Businesses are bought. So there's nothing you can do to affect an outcome. You may structure a company in a certain way so that it's easier for the company to be bought, but you have to run the company every day believing that it's a long-term business that you want to be part of. I ran my business right up to the point where I ended up doing a merger where it made sense for me to leave, but my intention was to continue to build a company that had a 20-year life or longer. I think it's a mistake to go into a business with the idea you're going to flip it, because that's transparent to investors. Nobody wants somebody with a short-term time horizon. You want somebody that's committed to that business for the long term to see it through. So, I mean, for us, it was always about building long-term value. And that's why you invest in culture, quite frankly.
And mine kind of morphed because I had the, high idea of, I want to flip this in a couple of years and sell it to a big strategic company. And look at, now it's 12 years later. I'm still running the company. And then it hit me that one day that, I guess my kids could come into this business if they wanted to, because I visited my son's, I think it was his 3rd grade classroom, and they asked him, so what do you want to be in the future? And he wrote, I want to be the president of Nature's Cure. And I was like, I guess I could have, and they do come into the office. It hadn't even occurred to me. And so I'm okay with either. I'm okay if we, like you said, you can't really sell your company. It'd be nice to have somebody knocking on your door. You're obviously going to get a higher valuation. I would be fine with that if it were the right offer. But on the other hand, I'm also having a lot of fun running the company. And so I'm okay holding it on to, for the longer term, as long as we're doing well and we keep introducing products that will be successful. So my strategy has kind of changed. And I didn't raise a lot of money. I raised mainly from angels, and I had one VC. And we really haven't raised any money since that day, which was 10 years ago. So it's been self-funding since that time. But we've been on a much slower growth strategy. I haven't had any VCs get heavily involved in the company, which I've been really happy about. The board is still very small. So I've liked the fact that I've been able to really control a lot of the growth of the company, where it's going.
My question is for Scott, but I'd like to hear Josh's perspective as well.
We'll just flip a coin here.
It seems that you've had success with what you did, and my question is really, do you believe that the analytical approach to coming into an industry or a business that you know nothing about is a replicable model, and how much risk do you think there is to people who will take that approach to entrepreneurship?
I think it is replicable. I think it's sort of a cross between sort of Irv's search fund concept and maybe a very consultative approach to how do you attack a problem. My background before I started my first company was I worked for a large consulting firm, so I was in the mindset of problem solving. So I think it's absolutely replicable. I think the hardest part is picking the right sort of DNA you combine in the initial part of the company. I was fortunate. I had 3 other partners with really heterogeneous skills. A couple of us were very technical. Some of us had good financial skills, and together we made a really cohesive team. And then, from a culture perspective, from a personality perspective, we enjoyed working together. I think if you can get the right ingredients, I think every industry is ripe for having problems solved. How big the opportunity is really what differentiates the different problems. But I can tell you, when we went through this process, we identified at least 3 other opportunities that I think were as significant as what we looked at. The hard part was not picking an idea. The hard part was picking which one we were going to do. So I'm convinced it's replicable. And Garth and a couple of other folks have taught a case on Fiber Tower for the last 6 years. I think other people have done what we did and created successful companies.
I agree. I think it's a good approach. I think it's a good approach. I think it is replicable. It's probably the most replicable approach there is to doing this. Is to try and get out in front of where things are moving. You're just getting 24 months out in front. You're trying to have an insight one step ahead of basically everybody who's playing there today and be in the right position when it gets there. And I think that demands a very high level of execution of your team. Which I think is, if you're not willing to bet on yourself doing that, I think, you shouldn't be doing this. But I think it's a great idea. But I think it's a testament to his execution that they both picked a great idea, and even more so we're able to capitalize on that using this strategy. And I don't think it should be taken for granted that just anybody could actually, even if they come up with the same idea, end up where his team ended up. We've never met before, but that's my takeaway from what we've talked about.
I like him now.
Please join me in thanking our
Congratulations. Too late.